Hello, hello to my extended real estate family. Here we are. It is springtime, and this is your spring housing market update for the Bay Area. I, for one, am so glad to be done with the rain, or hopefully done with the rain. Definitely looking forward to some sunnier days. I was absolutely over it. Not sure if you were in the same boat as me in that regard, but yeah, I'm looking forward to some warmer weather. So with that being said, I want to jump into what I have for you for this video and this market update. I want to give you a little bit of data of what we're seeing in the markets here in the Bay Area, along with a few notes in regards to some of the kind of macro news that we've been seeing, specifically Silicon Valley Bank. Now, I've had a lot of people reach out to me asking me for my take, and if you're a little bit curious about what's going on or what happened in that banking collapse, in the email below, there was a really succinct synopsis that a gentleman named Kevin Kwang wrote. Now, Kevin Kwang is somebody that I follow. He's an entrepreneur, he's a best-selling author, and he's a contributor to the Wall Street Journal. And he wrote one of the most succinct, easy to understand explanations of exactly what happened to Silicon Valley Bank and what caused their collapse. And I basically copied and pasted and put it in the email below for you to read. But essentially, what people have been asking me is, am I worried about what that could possibly do to the housing market? Is this a broader crisis? Well, I don't think that anybody has a crystal ball in that regard, but from the contacts that I have that are in the financial industry, the banking sector, people that work for hedge funds, all the various people that I've talked to within my network, they feel like the situation in regards to SVB is contained. And the reason for that was Silicon Valley Bank and Signature Bank, the two that actually collapsed, the number of deposits that they had that were uninsured relative to the overall deposit pool that they had was in the 90% range, which is very high. And First Republic Bank, which is the other one that you've heard in the news, the amount of deposits that they've had that are uninsured, and when I say uninsured, I mean they're not insured by the FDIC, so that's all deposits over $250,000 in one account by one account holder, that First Republic Bank was at 67% uninsured, which was also very high. From my understanding, from the people that I know in that sector, in that area, in the banking world, have essentially said that there's a really big drop off from there as far as the number of banks that have uninsured deposit and the percentage of uninsured deposits relative to their overall deposit pool. So they feel like the situation with these couple of banks is fairly well contained. Now, we don't necessarily know what's hiding behind the curtain. So is it possible that this mini banking crisis could turn into a bigger one, or there might be some contagion out there? It's certainly possible, again, because we don't have a crystal ball, but from the information that we do have and from the information that's been communicated to me, it sounds like it's pretty well contained. If you have any questions about this or you want to talk about it a little bit further, please feel free to reach out to me. I'd love to grab a coffee or just jump on a call and catch up with you about it. So just let me know if you'd like to chat. Moving on to the housing market here in the Bay Area. If you recall the video that I recorded for you back in January, we were starting to see a basing of housing prices. There were about 40 to 45% of the zip codes here in the Bay Area were seeing price stabilization or price appreciation, and the zip codes that were still seeing declines in prices, the rate at that decline was starting to slow. And when we jump forward or fast forward 3 months here, we are still seeing that same data. In fact, that data is improving and continuing to accelerate. And we have a lot of other data points that we can point to that the housing market is pretty well stabilized at this point and basically might be moving back into appreciation mode in earnest. Now, some of those data points are anecdotal. Others are a little bit more, solid, so to speak. So starting with the solid data, we have seen a home builder confidence number increase for the first time in the last 12 months. That actually happened back in February, and we've continued to see their confidence rise. Now, the reason why this is so important is because the home builders, especially the national home builders, have more data than any of us will ever have. They have a better handle on the housing market as well as the state of consumer health, basically. And so their confidence has risen, and in conjunction with that, we've seen the number of housing starts increase as well. Now, housing starts are basically the number of permits or new permits that have been requested and issued for new construction, and that number has picked up also. And so when you combine that with the data that we had from January and the continuation of that data along with some of these other data points, we are continuing to see kind of the strength in the Bay Area housing market. Now, coupled with that, we also have seen interest rates decline a bit, and we have seen the number of mortgage applications continue to rise. So we have a lot of data that is really kind of pointing to, like I said, just the stabilization and the strength of the housing market. Now, anecdotally, personally for me, clients that I've been working with since the beginning of the year, what we have seen in the last probably month and a half or so is there are a lot of buyers coming back into the markets. I have helped a client in Oakland who a property that we put an offer in on, there were 58 disclosures downloaded. So that was 58 buyers for one property in Oakland that were at least interested in putting in an offer. We also saw a client of mine in San Ramon that I literally just got a note from the listing agent. Offers were due yesterday, which was Monday. They received over 100 offers on that property. Now, another property in Walnut Creek that I had helped a client with, we beat out 15 other offers. So what we're seeing is there's a lot of buyers out there, which means the demand side of our equation is very strong. Now, when we look at the supply side of our equation, and this is a very important data point, then the number of homes that are available on the market for sale, so our inventory, our supply, is at historic lows. In fact, it's at its lowest point that it's been in the last 24 years. So when you continue to have this imbalance in supply and demand, this is an environment that is essentially set up for continued appreciation of home prices. And unfortunately, we're not expecting a big change on that inventory side that would essentially balance out the market. And the reason for this is we've seen a dramatic decline in baby boomers moving. And usually they're a pretty consistent amount of inventory that we can expect from baby boomers as they decide to downsize their homes. They're just not moving in the numbers that they previously were. And the other group of sellers that we usually see are people that are looking to upsize or move into a bigger home as their families are growing. What we're seeing is that a lot of those sellers are not selling their homes and they're not upsizing in the kind of the pace that we normally see. And the reason for that is if they've bought in the last couple of years, their interest rate is around 3%. And that's a pretty tough interest rate to walk away from or to move away from. And so that's something that we have also, really seen. So again, just the environment on the supply side is really, really tight, and we're not expecting to see that change much in anytime soon. And again, we still have a lot of buyers out there, even like I said, just based on some of those anecdotal examples that I gave. So just in a quick summary, we're expecting to see the housing market here in the Bay Area continue to stabilize and move towards appreciation again. So that's essentially where we're at, very similar to where we were at in January. We're just starting to see that basically increase and continue. So again, if you have any questions about this, please do not hesitate to reach out. I would love to catch up with you. Would love to grab a beer or a coffee, see your face and get the chance to catch up. And so with that being said, I hope you have a great spring and you're looking forward to some nice sunnier weather as well. And I will see you again in a couple months with your summer housing market update.